Are you 25 to 45 and you've asked the question, what is indexed universal life insurance? Well, if you're like me, I have searched Google, I've searched YouTube, and there are places where I've received some information. And then there's other places where it's like I left with nothing more than confusion. And so the reason I'm putting this video together is I have taken almost the last 6 years of my life understanding this product and truly mastering the ins and outs of this particular product more so than I would say 99% of the agents that are out there. And that is why I put this video together. There will certainly be more videos than this. This is going to give you a foundation of what this product is. So let's get started. I need to share this with you real quick. Here we go. So I don't know if you have looked on YouTube and seen some videos like the ones on my screen. There are people that put these videos together and they sound like they're mad, they're angry, they're upset at the product. They sound like they are totally disgusted that this product even exists. Then you have other people that are so monotone and they speak with such facts and details that you turn the video off before they even get started to the good part, you know? But I've watched countless videos on this product. And there are some great people out there teaching some really good information, but a lot of it, whether it be on Facebook, Instagram, YouTube, or TikTok, especially, you're going to find a variety of information, a variety of promises. And the truth is, can I trust it? And so you walk away with confusion when it truly is something that you need to learn about and act upon. So I put this together to help you because I want to share free content. I want to give you value and I want you to be able to walk away knowing the facts and the education about this particular product. First, what is indexed universal life insurance? That's the question. Number one, life insurance, we're going to have to back up a little bit. Life insurance started in the 1700s, so it goes way back. Okay. It started in the 1700s and it has evolved into something that's more structured in the 1800s. Okay. So it became a more structured product in the next 100 years. Okay. Then in the late 1800s, a product called whole life insurance was developed. You probably heard of this. This was truly the first permanent life insurance product that had a cash value element to it that has ever been developed. Okay. If there's one before this, I'm unaware of it. Okay. And it doesn't matter if there was one before it because, you know, it's not talked about today. But everyone's probably heard of whole life insurance. And what does it mean? It means you're going to have life insurance for your whole life. That was the whole purpose behind it. Whole life provided a death benefit plus cash. That was a very unique item because up to that point, the main life insurance that was available was something called term. That may have been called something else back then, but it's called term insurance, which is only for a period of time and it's just life insurance. Basically, you don't have any benefit unless you die. And when you die, there's a payout called a death benefit that would go to your beneficiary. So, what do we have next? Companies like New York Life, MetLife, and Prudential really started to expand and sell this product in a big, big way. The demand for flexibility led to variations. Now, here's the thing, the market wanted flexibility. We want more flexibility. And so that led to variations in the product to meet the demand of the market. I hope that makes sense. You've seen this in many products. This is not just in insurance. You've seen this in plenty places. Okay. So in the 1970s, something called the universal life insurance came out. And in the 1980s, variable universal life insurance came out. Okay. Universal life insurance is an evolution. It is a development. It's a progression beyond whole life insurance. Okay. Then, as the market wanted more, they wanted more flexibility and they wanted more features. Something called variable universal life came about. Okay. I'm not here to educate you on the universal life. I'm not here to educate you on the variable universal life. And we can certainly do that in other videos. But I'm here to talk about the IUL, which we're leading up to right now. These provided control over premiums and investment options. That is what the market wanted. People wanted the ability to control their premiums that they paid either monthly, quarterly, or annually, and the investment options. Now, when I say investment, some of these products, like the variable universal life, your money is actually in the market. Okay, so I want to understand that word investment is very important to understand why it's being used. So I want to make that very clear. In the late 1900s, the indexed universal life, IUL, was created. It was actually 1996. It was late 1900s. That particular product was started. Okay. Now, what is index universal life insurance? We are now here. So we've seen the progression from the 1700s all the way to the late 1900s. All right. So here we are. Index universal life. What is it? Number one, it is permanent. Why does this matter? I'll tell you why it matters. It matters because I tell every young person, you are young and healthy. Young and healthy. In fact, you're the youngest you'll ever be, no matter what. And you're probably the healthiest you're ever going to be. So once you get this particular policy, as an example, you get this particular policy, you get it lined up, and you make your premium payments, you will have this insurance no matter what happens to your life in any way, shape, or form. It will carry with you forever until you die. Okay. So it is a permanent policy. It can't be taken away from you, no matter what happens to your health. That's very, very important to realize. Okay. Number two, there's set premiums. Now, understand there are IUL products. In fact, almost every one of them that I represent, IUL products that you have what's called flexible premiums. Now, you're going to have a set premium that you need to pay on a monthly, quarterly, or annual basis, but there's some flexibility with how much and when you make those premium payments. I'm not going to be going through that right now, but that is something you can go through with your agent and find out the details about that. Number three, there are two buckets. This is important to understand. Let's say you have your premium payment, whatever that is. You pay your premium payment. Those dollars in that premium payment are going to go into two different buckets. Okay. They're going to go into two different buckets. Bucket number one is the cost of insurance. This covers administrative fees. This covers the actual insurance itself. This covers everything related to costs. Okay. Now, when I walk a individual, couple, business person, whatever it may be, through the illustration, many times I'm walking them through the actual costs of insurance, and I show them to the penny what the costs are, what the administrative fees are, everything that is coming out of it. But I'm also showing them what's going in on a positive amount as well. So bucket number one, money from your premium is going to go into bucket number one. That's the costs of insurance. And we're not going to go through all those right now, but your agent can actually walk you through that. And that's something that I do with all of my clients in almost every situation. Bucket number two is the cash account. So you make your premium payment. There are some dollars that go into the cost of insurance. The remainder, which is normally the majority of your premium, is going to go into your cash account. Look at it like a savings account. And also remember, the premium payments that you are paying into this policy, the premium payments that you are paying in are done with after-tax dollars. That's very important. This is not like a 401k where before you get your paycheck, money goes into your retirement account called a 401k, and they're using pre-tax dollars to fund that. No, these are after-tax dollars funding this particular policy. So you make your premium payment, there's money going into your cost of insurance, and there's money going into your cash account. Those are the two buckets. The financial benefits with an IUL. Number one, you cannot lose money. The money that goes into your IUL, okay, that goes into your cash account, you will never lose money. So you have principal protection. That is very important to understand. There are other principal protection products out there, sure. Do I know them all? I don't. There's not very many, but I'm just letting you know this is a product that you have principal protection, number one. Number two, we're going to explain this in just a minute. You will have growth in your cash account, and we'll explain that. You will have growth in your cash account, and all of the growth inside that cash account is tax-free growth. That's very important to understand, okay? So those are some financial benefits that you have with an IUL. There's others, but we're just going to go through those main two. Living benefits with an IUL. This is critical. Most people don't think about this. Most people don't even know it exists. In fact, most people I talk to have never heard of living benefits. Some people refer to them as accelerated death benefits. Okay. So we're going to call them living benefits. Let's say you have your life insurance policy and you get diagnosed with a terminal illness, you become disabled, you have a need for long-term care, chronic illness, chronic sickness, critical injury, something like a heart attack, stroke, or cancer. All of these things may not kill you, but your life is dramatically influenced because of it. Maybe you can't work the way you worked. Maybe you're a doctor and can't use your hands anymore because of your stroke. Maybe you having to take 6 months off to recover from your heart attack. I don't know your situation. Maybe you need long-term care and don't have long-term care insurance. Understand something. This IUL product can provide all of those things because of what's called living benefits. You would file a living benefits claim, which is, like I said earlier, an accelerated death benefit. It's going to use your death benefit early to help you while you're alive. So it's a benefit while you're alive. It's a living benefit. And there are other living benefits that have to do with finances, your cash account, things like that. But just on a medical side, those are the living benefits that you are looking at. My little mouse is being slow here. So here's what I want you to realize, okay? On the picture here, you see a flip phone. I used to own a cell phone business. And I remember the day when you would go into a cell phone store and there were we used to call them PDAs, personal digital assistant, a PDA. There was 3 PDAs in the store and all the other phones were flip phones and maybe a couple what we called bar phones. These are phones that didn't flip. Today, you might find a flip phone in there. And if you do, there's only 1 or 2. The rest are all smartphones, tablets, you name it. Security systems, you got it. Understand something. The difference in these 2 phones on this screen is no different than life insurance. The market wanted more in a phone. And Steve Jobs is the one that kind of put it all together through a company called Apple and made what's called the iPhone. Now, I know there was probably some stuff before that, but the truth is, iPhone is really what made it blow up. So this is nothing more than market developments, product developments, the evolution of the phone. That's all this is. And so if you look at the 1700s through today, what you have in an IUL truly, for all that it offers, it is truly the Ferrari of life insurance products. Now, is it the end all be all for everyone? No. Does everyone need one? Not necessarily. Okay. Is it the silver bullet of everything? It's not. But I'm just letting you know, as far as what it offers, there's not a whole lot that it doesn't offer. In fact, it offers almost everything you can get in any other life insurance product in one. Okay. Very, very nice. Last, this is two very important things. Number one, whether I'm your agent, you want me to be your agent, or you have an agent, it is very important that your agent understands the IUL product properly, because there are multiple things that you can do in that IUL early on in the beginning stages that are going to impact your product 5, 10, 15, 20, 30, 40, 50 years from now in a big way. There are things that can be done in that product that will dramatically influence the the growth and the different things that can happen inside that product, good or bad. It's very important that your agent understands the product through and through. Okay. It's also critically important that they are very knowledgeable on how to properly structure an IUL. I'm not just talking about making sure that you have the most money going to the cash account that you can and the least amount of insurance being purchased. That's a basic. There are multiple areas where structure can be done, and most agents out there right now don't know about it. Okay. It's something that I will be teaching. It's something that I do. It's something that I've done, and it massively impacts my clients. And I know they can't get that anywhere else. So I just want you to understand, in the description, you're going to have links to setting up a discovery call with me. If you want to set up a discovery call and have a 30-minute conversation by phone or Zoom, I will do that with you, no cost. Number two, I'm going to be putting in many other videos talking about specific segments of this particular product to educate you more in depth about the IUL. So please come back and check it out. But lastly, please subscribe. Subscribe to my channel. I want to grow my community, and I want to make a bigger impact in the area of life insurance and business in general. And you make that happen.